Hello traders, Gary Wagner here. It is approximately 11 a.m. in Honolulu, 4 o'clock in New York City on Tuesday, 24th day of January 2012. And this is the daily report for gold and silver. We do have both under pressure. Nominal pressure after the kind of gains we've seen, down off about $10 in gold and off about 34 cents in silver. This daily video is following a special update that I did. Not that I'm all that concerned. The market itself at some point is going to retrace. We will get that corrective wave with the Federal Reserve meeting concluding tomorrow. Some sort of an announcement is going to get made. If it has a negative effect on the market, I want us to have fairly tight stops in play. If in fact the market takes off and continues to run, I'm hoping we put them loose enough down so that it weathers any kind of knee-jerk or noise volatility, let's say. We broke below $32 in silver. We'll start with that this morning. And the way that I look at this market is really what we have been seeing is periods of higher prices followed by either small corrections or really sideways activity, really consolidating, forming a base, and then moving back up. Right now, we could easily be doing that, forming a base before moving back higher. However, the fact that we have hit this number here and it has shown us to have a little bit of resistance, it's a logical place to look for a correction. Does that mean we'll see one? Absolutely not. But at the same time, first trade of the year, we've got some really strong profits in the market. We're in at 28.10. You know, at 32.10, you've got $4 on the trade. That's a terrific trade to start the year off. And my sentiment is when we take a look at a sub count, and that's what got me thinking about this, because if we take a look at this being wave one, we're going to have that sub count. You've already got 1, 2, 3, 4, and this would be wave 5 of a sub count. So there's some logic in the fact that we might get some sort of a pullback here. As I said, the market's going to do what the market wants to do. We're positioned in there beautifully. I just want to make sure that if in fact it does come down, we're there pulling profits. We're buying back at the bottom of the dip. Let's look at our gold market. Gold market under a little bit of pressure also, 1664. As I say, nothing that I'm all that concerned about. And when we take a look at it, you cannot see any kind of a really strong wave count, not on the daily. So to do that, we've really got to take this to an intraday chart. Let me go ahead and change that, and you'll see what I'm talking about. Now, traders, we're looking at the exact same chart, except that I have converted our daily into an intraday chart. The length is 240 minutes, meaning there are 4 hours per candle. So it really will allow us to break it down a little bit. And when you then look at the area in question, meaning this last rally right in here, you're going to see that you actually start to see some variations in there, and that's how we'll go ahead and get our sub count. So there's a couple of possible ways to look at a possible count, but as clear as I can see, I've got a 1, a 2, and really this goes into this area. So right now, this would be the top of that third wave. So you could possibly get a 3 count in gold, meaning 335 or a 355. You can get a combination of them, but we've certainly completed in terms of a subwave count, at least on a tentative basis as a rough view. Absolutely, you've gotten wave 1 concluding here. You've got 2 here. My sentiment is this is the top of 3. And as the top of 3 on a sub count, if it continues higher, we'll see this little dip. We'll get our 4, and then we'll get our final 5, and that will conclude our first impulse wave, wave 1. Or you'll get a 3 count. The market will retrace here, and then we'll go into an intermediate 2. In either way, it's something that we absolutely just need to pay attention to. As I said, I'm not real concerned. We have nice profits in here, but I certainly don't want to see those profits erode on that corrective wave when we have been anticipating this as the area that it's going to come to. Did it get there? Well, you know what? it got very, very close. 1686, we take a look, we draw that over here, and as you can see, there can be no mistake, but we are very, very close to that area. If the market would come down at this point, there's no doubt I would still believe that we nailed the top of this market, even though I believe the high was around 81. We came shy by a couple of dollars. To me, that's still very, very significant. Again, we have some historical data right in here. That the gap still shows up, of course. You've got this resistance area here that becomes support here, and depending on how the market reacts, will it become resistance back again in here? Time will tell. We'll have to see. But with the Fed concluding a meeting tomorrow, my sentiment is anything can happen in the market, but what we want to happen is to have a profitable trade. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.